If we go back in time and take a look at what happened, we had a multi-year consolidation in gold, and then everybody piled in just before the recession and financial crisis in 2008. And we've had the same multi-year consolidation. Everybody's now running for safety, just like they did over here. And then we're going to go into what I believe will be the next 2025 bear market, recession, crash, whatever they're going to call it, whatever is going to trigger it. And so gold will pull back. So I'm very bullish on precious metals.
The precious metals market has set new records in a remarkable turn, with gold and silver prices soaring to unprecedented heights. Gold's meteoric rise reached an all-time high of $2,469 on Tuesday, while silver touched $30.87, reflecting a growing investor appetite for safe haven assets. This surge in precious metal prices comes against shifting expectations regarding the Federal Reserve's monetary policy. Initially, the market anticipated as many as 3 interest rate cuts in 2024, fueling gold's early year rally. However, current projections now suggest only 1 rate cut may be on the horizon for the remainder of the year. Despite this adjustment in rate cut expectations, recent comments from Federal Reserve officials have solidified market beliefs that an easing cycle could begin as soon as September. This sentiment has further bolstered the appeal of gold and silver as investment vehicles. ChrisVermeulen, a respected financial analyst with extensive experience in precious metals and stock markets, offers insights into these developments. Vermeulen sees the current gold rally as reminiscent of previous breakouts and projects prices could reach $2,650 to $2,750. He draws parallels between the current market conditions and those preceding the 2008 financial crisis, suggesting this surge might foreshadow a major stock market top and potential recession in 2025. For silver, Vermeulen's outlook is equally optimistic but more nuanced. He identified significant undervaluation in the silver market and estimated that prices could hit $34 to $38 in the coming months. However, he cautions that gold and silver might experience a sharp pullback during a recession before potentially embarking on a parabolic rise. The strengthening US dollar, typically a headwind for precious metals, has not dampened enthusiasm in the sector. Instead, it has contributed to the overall bullish sentiment, particularly in the silver market. Please tune in for our exploration of ChrisVermeulen's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I would say it's a bullish breakout. That breakout is pretty similar to right here. I believe I think this is the start of the next leg up. We have a rally, a consolidation, a rally, a consolidation. It's breaking to the upside. Gold miners have already broken their previous highs, so they're leading this charge, which is a good sign. I think gold is going to 2650, 2750, which is right about here, and then potentially right up to here. So that's the next leg to the upside. You can use Fibonacci extension for this to get the momentum. You can use just a simple bull flag pattern. Either way, it brings us right up to this 2750 window. And when gold hits that, I believe it will, then I think we could be very close to a major stock market top. Because if we go back in time and take a look at what happened, we had a multi-year consolidation in gold, and then everybody piled in just before the recession and financial crisis in 2008. And we've had the same multi-year consolidation. Everybody's now running for safety, just like they did over here. And then we're going to go into what I believe will be the next 2025 bear market, recession, crash, whatever they're going to call it, whatever is going to trigger it. And so gold will pull back. So I'm very bullish on precious metals. In fact, check this out. I just got this. My buddy had to move and get rid of it. So I just bought a 1,000-ounce bar of silver to take off his hands. And I'm super bullish on metals, both short term and looking forward like 5 years from now. I think they're going to go very ballistic in due time. I stick to the price charts. I always know, if silver's not leading the charge up and it hasn't gone parabolic, it's probably underperforming gold. So I just look at the charts. I mean, I think I do it in my head automatically. I don't have to pull up a chart to see it. But yeah, silver's very undervalued. It has been for a long time. It's starting to come to life. I think silver could go to 34, 36, 38. This is the monthly chart. So the next 1 to 2 months, I'm still very bullish on metals. And I think silver's got quite a bit of upside, like 18% upside from here. Gold's got about 10% upside from here. So I like the space. I do think they're both going to do the same type of thing in terms of right now they're both in a run up phase just before a bear market, and silver pulled back 65%. Silver could pull back very sharply when we have a recession, and that'll be the last opportunity before I think we see like 50, 80. Who knows how high gold will be, or silver, sorry. It'll be one of these parabolic. I used to call them the golden rocket ships back when we used to trade them back in this time frame. You get into gold, silver miners, and man, did they ever go ballistic. I mean, life-changing stuff. So that is coming, but I think it's still many months out for that final push.
Small cap stocks have recently surged into the spotlight, challenging big tech's long-standing dominance. This sudden pivot in investor interest has sparked debate about whether it signals a more sustained trend favoring smaller companies. Market expectations for a Federal Reserve interest rate cut have dramatically increased, with the probability of a 25 basis point reduction in September now hovering around 95%. This prospect is particularly enticing for small-cap stocks, which tend to be more sensitive to borrowing costs. A rate cut could significantly boost these companies, assuming a sharp economic downturn does not prompt it. A seasoned financial analyst, ChrisVermeulen, offers valuable insights into this market transition. He points to the Russell 2000's recent breakout as concrete evidence of the shift away from large-cap tech stocks. Vermeulen attributes this rotation to a combination of factors, including the aforementioned political and economic considerations, and a natural technical progression following a period of consolidation in the small-cap space. Let's get back to the interview.
If we take a look at the charts real quick, we can see the SP 500 here. It really is kind of stuck in this tight little wedge. It's not really budging to the upside. And when we look at the NASDAQ based on, it's got the big techs, it is definitely struggling. It is stuck kind of in this sideways pattern. And what we're seeing is, I think we're seeing rotation into the small caps. If we look at the Russell 2000, which is a very good barometer of the small cap growth, it has just exploded to the upside with volume. And I think this has to do with a few different things. Possibly it has to do with Trump. If he gets in, he's talking about tax cuts. It's going to help small businesses huge. So I think we're seeing stocks pop on that. I also think we're seeing the rotation out of the technology space, David, as you mentioned, where we are seeing heavy volume in the Magnificent Seven. We're seeing the whole tech sector as a whole flatline and trade sideways and lower while the small caps are going up. So we are seeing rotation out of the big mega caps and into the small caps. I think both of those things are creating this huge fuel, this big rally in the small cap sector right now. I think it's just a perfect storm. I mean, when we look at the Russell 2000, if we kind of just zoom back, it has been trading in this basing formation, this bottoming formation for a while, and then it's been holding up at the upper end of this range, just building a launch pad and a reason for it to spike and pop. And so we're starting to see that pop and breakout right now. Simply, I think just time has done its thing. This chart pattern shows it is ready to break out. And then we have the potential, the assassination attempt on Trump, which will probably get him elected. And if he gets in, it's going to help small businesses. And on top of that, we're seeing big volume selling in the tech, and it's big volume selling. So to me, it's institutions are starting to lighten up their portfolios, saying, "Hey, we got massive gains here. Let's start trimming back," because I think they're starting to see the music coming to an end. And a really interesting point is we saw something similar to this back in 2021, where the small cap space, the majority of aggressive stocks topped out in March of 2021. Well, small caps find this last little squeeze higher, and they kind of suck everybody in just before it goes for a huge bout of selling. And just take a look at the weekly chart here of the Russell 2000, and we go back to what happened. So I believe we're in this major topping phase, David, in the market. If we look here, I believe this is a major stage 3. We had a big pullback. We have this complacency move, and we're starting to see this squeeze higher in small caps. Well, very similar. We have a topping phase back in 2007, 2008. We put in a complacency move, and the Russell 2000, you can see this spike on the chart, and then it chewed them up and spit them out, and the market went the opposite way. So we, I believe, continue to get closer and closer. The small cap stocks, the news, the events are sucking people into this market right now. The VIX is low. It hasn't been this low or stayed this low for like 30 years. That somebody just told me something like that. I don't know what it is, but there's not a whole lot of fear in the market. And people are kind of piling in. So I just think
Could
the
it be?
timing's right. I think there's a lot of stars aligning for all this to come together.
As these intriguing market dynamics unfold, investors are left with critical questions. Will the surge in precious metals continue to parallel historical patterns that preceded major economic shifts? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.